Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at how the USE minis unfolded yesterday, particularly as we had a very sharp move in around the 2 o'clock time when the Fed made an important announcement, and obviously as you can see the market rallied strongly after that. But as we normally suggest, just before a Fed meeting you have to be very careful, because you can see here the market went straight down, straight up, straight down, whipsawed really badly for about 10 minutes. So this is the kind of thing you don't really want to be in. So we normally suggest leading up to a Fed meeting you want to be very cautious. There was actually a standard MTPredictor trade setup here. You can see we have a couple of history triangles. If I place the analysis on, you can see there was an ABC setup coming into here, and actually there was a double top, so we only had one trade. So if you did take this trade, the market did get down to your target level where you would have come out, you'd have had an MIT order at that level. You can see the STF was weak because it wasn't beyond our strength band. You'd want to be coming out at that level as well, and that's what happened. If we go down to a 1 minute chart at that particular time, just want to show you a bit more detail. You can see the market opened on this bar, went straight down, then straight back up again. So you'd have probably got filled quite quickly on your order to come out there. So if you had have taken that, that would have been a nice 3.6R profit. But as we suggested, so I'll just put that back on, I've moved that by mistake, 3.6R profit there. But as I suggested beforehand in our training webinar, be very cautious going into any Fed announcements, because as you can see it can be very, very choppy. So is there anything you could have done after this? Well, if we just clear the chart off, and if I place a decision point support level from that previous low, you can see that this is the area where the ES actually made its low as well. The market then rallied up strongly. Ideally we could have been looking for a minor correction in here to get long, and if I go down to the shorter time frames, there wasn't anything on this apart from on the NQ. If I go back to the NQ, there was a trade set up on this initial correction after the move here. You can see here's the setup here. So I just want to clear that off. I just want to go out to the higher time frame to show you how we set this up. In fact, actually I'll go out to the 15-minute time frame to show you how I had this support level on in advance as well. This was quite handy to have as well. Remember, we go out to the higher time frame to place our support zones, our DPs on the chart. These are leading indicators, so they are on the chart in advance before the market even gets there. So before the Fed announcement, you'd have had this as the last pivot up into the high. So if we place the DP on from here, you can see that gave you a level of support around that level. There's also another pivot extreme there that gave you a DP slightly lower but in around the same level as well. So you had overlapping DP support at that zone. There was also another one down here that gave you a level much lower that wasn't actually in play. So let's have these levels on our chart. So they'd have been on your chart in advance before the Fed made its announcement. So if you go back to the 3-minute chart, you can see this is what happened. Basically the market came down low after the Fed announcement was at 15-minute support before it rallied up. So ideally now what you'd be looking for is a correction to then get long. So before I do that, I'll just go back to the 15-minute chart and put the higher time frame resistance area on, and you would have had that from this last swing high here. So this gives you an area of where you're anticipating the market to go, and it went into that and through it. But I'll put that on the chart deliberately, because when we come back to the 3-minute chart, you can see that this initial correction here had not reached this 15-minute resistance. So in other words, the trend was still up. So if you're more experienced users, you could have considered a long trade in this area. If you'd had your scanners running and you were really aggressive, you could have gone down to the 1-minute time frame and had a TS2 buy setup. This was a standard trade setup that would have got you long there. If you placed the analysis on, you would have had a nice 2.2R profit at the first target. If you'd been really aggressive, you could have looked to run that with the ATR stop. That would have held you in there up to pretty much the high for plus 6.2R. But even if you'd come out at the first target, knowing that there was 15-minute resistance just above you, you would have actually had a nice 2.2R profit there. So in other words, you would have been able to take advantage of the continuation of the rally after the initial move after the Fed announcement, but that was only been if you're a very aggressive trader. But can you see how that would have fitted in with your 15-minute support down here and your 15-minute resistance there? That would have actually been in the direction of that larger degree uptrend. So all in all, quite a choppy day yesterday, particularly with the Fed announcement. But if you were an experienced and aggressive trader, you could have actually got a long trade on the very short time frame after the initial correction there on the NQ. And as we saw earlier on the ES on our 3-minute chart, you'd have had a standard trade set up there down into that low for 3.6R. In reality, I think what you would have actually done was, as it came down into this low here just before the Fed announcement, you might have said, well, actually I've got 2.3R profit here, I'm going to take that and get out of the market just before the Fed makes its announcement. That probably would have been a far more sensible trade strategy. Remember, as I said right at the beginning of this webinar, when the Fed makes their announcement, you do get a very choppy, or you can get a very choppy whipsaw, sort of 5 or 10 minutes, which is exactly what unfolded there. So coming out early on that trade would have been very sensible indeed. But either way, hopefully this has been a good look at a very choppy and wide range day on the ES, which can unfold during Fed days, particularly with a view of using the MTPredictor software tools on a day such as that.